Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, ICE Brent crude oil. A second bearish black crow after the previous session's bearish closing black Mariboso and bearish engulfing pattern, and a surprisingly third bearish pattern. What is more, it was also day 2 in a 2-day homing pigeon pattern. Now, traditionally this is seen as a bullish continuation pattern. However, data indicates that close to 6 out of 10 times such a pattern ends up being bearish. So it'll be interesting to see if the market follows the tradition or the data on this move. Overall, the market continues to be caught within the stratified and layered congestion stretching from 68.69 up to 72.29, with yesterday's cap being the 2020 high at 71 3/4 and the market closing just above congestion at 71.29, with the March 23 low just below that at 70.67. The market is also still within the bright green December 25 based bullish Andrews pitchfork, in between the overhead bright green middle time, currently at 71.58, and the bright green lower time below, currently at 69.06. This bullish Andrews pitchfork has been the recent showrunner for this market. The December based bright green bullish Andrews pitchfork, that's it. Overhead, we now have layered congestion. 71.29, 71 3/4, 71.99, and finally the December 23 low at 72.29. Meanwhile, below we have support within this congestion at 70.13, 69.69, 69.27, and 68.69. Finally, we still have target X overhead at 73 1/4. This is the target for the doubling up of the break above the May and July 2025 to January 26 bear channel. 2 weeks ago this looked quite far, but now, well, not so much, though today isn't a great day for it. So far today, a higher open just under the May 23 low at 71.29, but falling lower, down through the congestion at 70.67 and down to rest, well, it's just resting on that 69.09. It's punched through that 70.13, the March 23 low. Spot gold. A counter to the counter bullish harami yesterday after the previous session's immediate countering bearish harami. And outside day. We had previously seen some large ranges in recent times, usually centered around the very recent late January, very early February 50% Fibonacci line at 49.99. Well, no longer, as last Friday the market punched up and away from this with a small peak higher on Tuesday this week before a pullback. Now, whilst not perfect, for example, it does not have the correct number of touches, there is, as I said this week, a possible bright red February based ascending triangle pattern, currently 49.96 to 51.13, which last Monday saw prices punch up through the top. This pattern has a primary target X in the 54.40 area, around where the 100% projected Fibonacci line sits at 54.48. And it has a harder to reach secondary target X1 up in the 55.80 area, just under the all-time high. As I said earlier, this is not a perfect pattern, so please bear that in mind, though the overhead area is fairly denuded of resistances for quite some while, but the market has chosen so far not to test this overhead area just yet. In the bigger picture, we have the dark blue late December 25 to early February 26 bullish Andrews pitchfork, which I drew 2 weeks ago, which I still consider able to show the potential bullish angle of attack of this market. I may, of course, finesse this to a shallower bullish shift pitchfork for the same move, should I need require it. But right now, this works, and we're in between the the dark blue lower time below, which is currently at 50.01, and the dark blue middle time above, currently at 56.33. Now so far today, not much. A little higher if anything, though still within yesterday's range. Please keep in mind the breached bright red upper trend line below of the ascending triangle as a base, as well as the 38.2% Fibonacci line, the big drop between late January and early February, a little nearer at 51.40. Bitcoin. A bullish opening, long white Mariposa and bullish engulfing pattern yesterday, if only just on the latter, after the previous session's bullish hammer pattern. This is a strong reactionary move up from the 50% absolute Fibonacci line at 63.129, and now calls into question the whole small dark blue sideways triangle, currently at 66.225 to 68.991, that's formed over February. The core of this pattern has and is the current rotation around the bright red neckline extension, currently at 67.541, to the August to the 21 to January 22 head and shoulders top pattern. And prices yesterday pushed up right through it, closing just over it, but not before pushing up through both the lower and upper dark blue trend lines for the small sideways triangle, as well as the August, October and November 2021 highs at 64.929, 67.058 and 68.977 respectively. This now puts at risk of retirement the final secondary target, not the primary, but the secondary target X below, for the break under the sideways triangle. We already reached the primary target, and that's down in the 58.017 zone. Going back to the bright red neckline extension, I had said last week actually, I think it was, and I think it is a very prescient quote. This bright red neckline extension is a key element in any moves lower, as it is a century ahead of the important 50% absolute Fibonacci line at 63.129, end of quote. This statement is still valid today, as this 50% absolute Fibonacci line halted the decline last Tuesday. Additionally, this 50% Fibonacci line had a strong support earlier this month. Even though it had been breached, it was still not broken. And as I warned last week, and I quote, "So please look for any confirmations below rather than just the one close. A common mantra in all such actions," end of quote. In the bigger picture, we still have a very large October 25 to date bearish halfway hesitation in progress, with the primary and secondary targets of this pattern already achieved, leaving just the much harder to reach tertiary target X2 down in the 54,000 zone, though there now might be the start of a question mark over this, as we are now set up for this week for a possible weekly key reversal. Thus, if we close on Sunday night over 68.792 or under 67.612, then we're beyond. Anything in between and we would have a lesser outside week pattern. We are right now looking at a possible outside week, but we still have a few days left to go. Additionally, there is another pattern, a bearish pattern, that I would like to address, and one I had previously considered. It is a February-based bearish cat's ears pattern. This is a small double top pattern that forms after a big drop, such as the one we had in early February. The key trigger for this pattern was the low 2 weeks ago at 65.080. This week we have had consecutive closes below this level, so I laid out possible targets for this pattern of a primary target X1 down in the 59.223 zone, and the secondary harder to reach target X3 down in the 57.986 zone. Given the recent action, I will stay retiring these two targets below for the remainder of this week, but right now I will likely retire them by Monday next week. Finally, as I've said last week, we have the potential showrunner for this recent move lower, the bright green early October 2025 to mid-January 2026 bearish Andrews Pitchfork, with the market today in between the overhead bright green upper time, it's currently at 76.286, and the bright green middle time below, currently at 53.856. There is no change to this point of view right now, but I am of course prepared to finesse this bearish Andrews Pitchfork into a shallower bearish shift Pitchfork for the same move should this be required. So far today, a higher but so far seemingly indecisive pattern. Capped by the dark blue breached February-based upper sideways triangle trend line and supported by the bright red neckline below right now.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.